Hey, what's going on, everybody? Thanks for tuning in. In this video, I'm going to be going over the basics of buying a put option contract on the Robinhood app. I'm going to look at it on the desktop version as well as the phone app version. If you haven't already, go ahead and smash that like button. I do hear that improves your trading accuracy by 20%. Just kidding. That's not a real stat, but it does help the channel grow, and I really appreciate it. Also, comment below. Let me know what you are thinking right now in the stock market. Are you watching a particular stock, waiting for the market to dip some more, trading options? I'd love to hear what each of you are doing. All right, let's get into it. So first, a disclaimer. I am not a financial advisor, CPA, or attorney, so please don't take this as financial advice. I'm just simply making this video for entertainment purposes and to show you some of the things that I'm doing and also experimenting with in the market. So let's start from the beginning. If you didn't see my last video on options, it will be in the description as well. I'll make it pop up in the top right corner. In that video, I showed a real trade I made, my very first option trade ever, actually, where I got over a 500% gain trading an Apple option. Talk about some of the basics of call options in that video. So check out that video if you're interested in calls. I was looking at the best way to explain to you guys what a put option is. Found this article on NerdWallet, really a good site for a lot of different reasons. Primarily, you think of this website where you're thinking about credit cards, but they have some other really good investing advice as well and just information. This article was from James Royal. This article will also be linked in the description. I really like how simple they made this to understand if you weren't aware. You can skip a few minutes if you want to just move right to trading put options on Robinhood, but you can see right here, put simply, the basic question in an options trade is this: what will a stock be worth at some future date? There are only two answers, more or less. Buying a put option is a bet on less. Selling a put option is a bet on more. This goes for the other direction as well, in case you're wondering. Buying a call option is betting that it will be more. Selling a call option is betting that it will be less in the future. So if you didn't already know, now you know that if you're buying a put, you're betting that the stock is going to go down. So let's get into what you're actually buying when you buy a put option. If you buy a put options contract, you are buying the right to 100 shares of the underlying stock. At expiration, if the stock price is lower than the strike price, the put is worth money. In this situation, the value of the put equals the strike price minus the stock price times 100, because each contract represents 100 shares. I'll explain this a little bit more going forward and make it a little simpler for you if that doesn't make sense to you, because there's quite a few terms when you're thinking of options trading, but they're not very complicated. It just takes a little bit of time to just research them, understand the basic meaning of them. You'll catch on quickly if you spend just a little bit of time with it. So as I said before, I try to make clear by highlighting it, but this is what happens at expiration. So most people don't know this side of it, and this is what keeps a lot of people from actually getting into trading options. They're nervous. They hear that you can lose your whole investment. That's the kind of the biggest warning side for options is, well, you can lose everything. And that is true, but it's not like you don't amplify what you spend unless you execute the option at expiration. Okay. So if you buy a contract, and that's just to actually pop on over to the Robinhood app right now, we're looking at SPY, which is also just happens to be one of the most popular stocks, period, especially when you're thinking of options traders. One of the main reasons why is that it is an S&P 500 ETF, which just basically means it's ETF that holds several stocks ranging in the S&P 500. It closely resembles the direction of the stock market, so it's a really popular stock when there's widespread, or if somebody individually just believes that the overall market is going to go in one direction. It gets traded a lot in those circumstances. So right now, with the whole everybody believing that the economy is going into the dumps, it's really popular to buy calls and to buy puts on SPY because of this. By the way, that goes for any stock. So if you have a strong belief that in a certain period of time you think a stock's going to go up or down, you can do this for any major stock that's being traded on Robinhood, or for that matter, if you're trading on any other platform. Just keep in mind, the more popular stocks, the higher the chance you'll get orders filled. So I'm actually going to show you guys over on the phone, since that is the main way that people trade with Robinhood. You can do this on your computer, on desktop. I'll show that as well. You'll be able to see some more data on your desktop. But anyway, so when you got SPY open up on your phone, you press trade options. And this screen is really, really handy for people who don't really understand what's going on. Even if you don't plan on trading options, one also, I want to make sure you have options turned on. It's not an automatic setting on your account if you've been approved for it. So make sure you go do that. But let's say you've already done that and you just have never really investigated it. If you press on that trade options, you get this Discover tab. And this is really nice. It really simplifies this whole process, gives you some good data. Green going up, red going down. Green call, red put. Gives you a few options. Again, we're talking about puts. If you want to learn about calls, check out my other video. But puts, you can see it gives you a few options. Really helpful. It gives you 3 off the bat, but you have many more if you show more there. Let's look at this medium term high risk. It's a 229 strike price. Expires November 20th, $7.10. Now keep in mind that $7.10 is on a per share and the contract is 100 shares. So you have to multiply that number by 100. So that would actually be $710 if you executed for that price. I'll just show you that real quick by going here, showing one, so you can see max cost $710 there. So if you find one on here that you're interested in executing, again, you don't need to. I just like showing this as a graph. This isn't where I execute options, but it really breaks it down simply for you here. So this shows what happens at expiration at different price points. So right now it says it's at $95.40. Your max loss on this is that premium, that $710 you would spend on this. So if it expires over $229, you will lose all $710 that you bought this option contract for. If at expiration it's at $221, you will break even, and anything lower than that you will make money with a max gain if it goes all the way down to zero of $22,190. Okay, just to kind of show you an example, let's look at maybe contracts that expire June 1st. This is how most people trade options. So you can see right here, this red line is $295.40. That is where it's at. So you'll notice it's generally more expensive when you're within a few dollars range or a few point range of that share price. So you could say it's kind of shows you here some of your options. So again, if you're buying this put, you're trying to make some money. It gets more expensive the higher you go above that price, because again, you're betting it's going to go down. So you buy one here, it's more expensive because it's already lower than that price. It's kind of confusing, but basically you're saying it's going to be above that amount, and if you do, then you have the right to buy all 100 shares. I'm not a big fan of trading that way. Not the worst thing in the world, but that's for a different video, a little bit more complicated. This is really simple to understand. Basically, you buy one of these. Let's say you like this one, the $291 put. You buy one, it's going to cost you around $388, depending on what that price it executes at. You can always set that price if you really like a certain price. Typing in, say you want right at that $385. Do that, execute that. But you can see the break even is $287.12. So again, that doesn't matter as much, that break even point. That really only matters if this goes to expiration. So what most people do when they're trading options, I shouldn't say most people, but a lot of people that don't have a huge balance or are trying to get in and out of these options to make quick gains, what they're doing is they're trading these premiums. So what you can see, this premium has dropped 53.92% today. Okay, so if I bought that now and let's say SPY drops a few more dollars, this premium is more than likely going to go up quite a bit as long as someone wants to buy it for that amount. So let's just say, for instance, if you flip this, if I would have bought a call at that same amount, a $291 call yesterday, today it'd probably be up similar. Let's go check that to confirm. So let's say I wanted to buy an option that was June 1st to $291, actually up 113%. So again, you can see you can make a ton on this in a very fast order relative to how much you're actually spending. Again, that would have cost you about a little less than half. So $785, you're looking at a little bit half of that. So you would have doubled your money, and you're making quite a bit of money really easy one day, where the stock only went up a little over 3% today. Not nearly as much of a profit if you would have day traded the stock or swung traded it for a day. So something definitely to keep in mind. I'm going to show you a couple of examples here too. I bought this one. I bought it only a couple of days before before it expired. I just wanted to buy this to have an example for what happens when an option does expire and it's not in the money. So on Robinhood, generally, if it doesn't expire, it's not in the money, it's not a break even, it just goes to zero. So I spent, let's go back in my history here for this. Again, my first 2 puts I did on here. I filled 2 contracts, so 33 cents each, which is $33 times 2, $66. So my premium is gone, $66. So when people talk about you can lose everything on this, again, as long as you follow follow these kind of directions, you don't lose everything. You just lose that investment of that premium if it's not a win. But as I just showed you, if you make the right call or the right put, you can make significantly more than 100% pretty easily. No guarantees, obviously, but there's just the movement's a lot greater on these options contracts depending on how far out they are. A lot of different factors. I'll show you this example of this option that I currently have open. Get another put, expires June 3rd. Click on it, see 240 put, down 72%. So if I sold it right now, I could sell it for $19. I would lose 49. A bunch of stats on it. We can see the history of what I bought it for and all that. So anyways, that's how it shows it up. And then also it will show up right at the top of your list on your app. So options go right to the top. It separates, but it'll show options and then it will show your rest of your stock investments. So on your desktop, just to show you real quick on here, you find the stock that you want to trade, the SPY, press trade options. You don't have that slick little featured section, but if you are trading from your desktop, there is a little bit quicker here. Like you can quickly, boom, go +1 there. If you find one that you like, or it's very, very simple to add. So that's a nice feature. It shows the share price right there in green. Again, this is a call, so we will go over to the put. You can filter the date here. So if we were going to go to the one that I'm holding, see +1, a little bit harder to find that, although I didn't go to it from here, but you can easily add one there and continue. The contract is after hours, so it's not gonna be able to execute, but they're very simple to add and remove. Another thing here, as you're scrolling, you can click that, take you all the way back up to the share price. So super helpful. You can see percentage change in total dollar amount, all that good stuff. So that's pretty much the basics of buying a put on Robinhood. I hope you enjoyed the video. Hope you learned something. Again, I'd love to know what you guys are doing in the market right now. So many interesting opportunities, so much price movement on a daily basis. Love to hear from you. If this is your first time checking out my channel, please do consider subscribing. And again, remember that like button. It sure does help out with your accuracy and your options. It's been about a month or so of me trading options, mainly calls. If you'd like to get an update of kind of where I'm at overall, I'm more than happy to share my wins and my losses. So until next time, thanks for tuning in. Peace.